Unrivaled Nation, I'm excited to bring to you another special interview. This time we're talking with Edwin Dorsey, and the question that you should be asking yourself is, should Twitter be part of your investment portfolio? Should you even potentially go all in on Twitter? Because I've heard from Edwin that he's something like 50% invested in Twitter, which is like, for me, that's mind-blowing thinking about those figures. Like, oh my gosh, risk management alert. But I think he's going to make a compelling case later in this video. And, you know, in full disclosure, look, I personally do not own Twitter at this point. I'd love to learn the case for it, and that's why we're making this video. And look, this is purely educational, entertainment related. This is not advice for anyone tuning in. Everyone has to figure out their own journey. If you're interested in following my personal journey, go to unrivaledinvesting.com. And the goal with this channel for folks tuning in for the first time is this channel is called Unrivaled Investing. We're trying to find exceptional companies and unrivaled investments. It's a no hype, mission focused channel, trying to find potential multi-baggers, stocks that potentially go up hundreds or thousands % over time. And so when I see someone make something 50% of their portfolio, I'm like, okay, they're betting on something doing really well over time. They're not playing for a 20% gain when they're doing it. They're playing for a potential revolution, potential multi-bagger. That's what I want to learn more. So how about this, Edwin? Why don't you? This is the first time I'm talking with Edwin. I've seen him a couple of different interviews with him. I've always thought that he's had this sort of disarming affability. So I think that'll come across with this interview. And super smart guy, clearly. Why don't you just share a little bit about your background, Edwin, so the folks can know more about you, your own personal journey. And then after, we learn a little bit about that, you can talk about the bear cave. After we hear your story, then we'll get into Twitter. So that way, we know a little bit about your background.
So Daniel, I'm very excited to be here. Thanks for having me on, and hi to everybody in Unrivaled Investing. I've been passionate about stocks from a really young age. Like in second grade, I was all about the stock market. My grandmother put a little money in an E-Trade account and gave me the username and password, and so I could manage it for her. And then I was completely hooked. My transition to the short side, which is where I do most of my research, happened freshman year of college. Just by coincidence, I was introduced to Mark Cahotas and Jim Carruthers, who were two of the best short sellers out there, and they became my mentor. Jim Carruthers ran a $1 billion short-only fund called Sophos, and I interned there on and off for my 4 years of college. And they really taught me the ropes of how to dig into companies, how to file FOIA requests, how to find lawsuits, how to navigate SEC filings, and introduced me to a lot of the key players in the short world. I graduated college a year ago during the pandemic. Most people in my position would have gone to a hedge fund, but I really hate suits and I don't like the formal structure, and I want it to be independent, Daniel. So I started a newsletter called The Bear Cave. It started out just as a free newsletter where I talk about what's going on in the short seller world, but it took off. Now there's about 17,000 people on the free list. Wow. And then there's a paid version where, for paid subscribers, I'll highlight 2 companies a month that are either misleading investors or hurting customers. Usually it's about 1,000 words. And the typical thing I do is I file lots of FOIA requests to get consumer complaints. And I'll say, hey, there's a car insurance app that's making it difficult to cancel and raising prices. Or there's this payday lender that's being very predatory, or something like that. And that's how I spend most of my time now. And I use the income from the newsletter to personally invest. And as you mentioned, Twitter is my biggest position. Now, Daniel, you might not be up to date. Now it's 75, 80% of my net worth is in Twitter stocks. So, and not just the stock, but like out of the money options. So I am overly concentrated. Maybe this will bite me, but I am a mega Twitter bull.
Okay, you are definitely all in here. Now, and that's, for everyone that's watching, like, unless you do your super due diligence, like that is not a position for most people to consider. You have to be Edwin Dorsey to do that, in my opinion. Like everyone has to have their own journey, but that's a little too much stress for me personally. I'd have trouble sleeping with that. But you know what? Maybe he's going to be making a compelling case in just a few minutes.
And Daniel, I'd say I'm different than most people, and I'm 23, so I don't need the money for a long time. And my newsletter can more than sustain, like, my rent and stuff. So definitely, if you're ever managing your own money, don't put a majority into one stock. I'm a unique case.
Yeah, I mean, look, it honestly, it reminds me a bit, the easiest way I think that people lose, a lot of people don't realize this, but probably the fastest way that most people generate sort of life-changing wealth is usually concentrated positions. The problem with that is there's an abstract blindness to it. Is it's sort of like in Vegas where you don't see all the losers, but you see the guys that are like, I made it, baby. And so it's like there is a challenge there, but I'm excited to learn more about Twitter. Before jumping into that though, working in the hedge fund industry, particularly short selling, my own personal background working in a multi-billion-dollar long short hedge fund. So I'm curious, what are sort of the insights that you've gotten, as working on the short selling side, whether or not it's about capital markets. I've seen some folks talk about how this is currently a golden age for fraud, and I think that is the truth. I'd love to hear your thoughts on either what you've learned or how does it apply to the current market dynamics that you're seeing out there.
So one of the things I learned working for hedge funds is that management teams lie or are not fully truthful, and you can't rely on their projections, and you shouldn't just take things at face value, especially in the financial world, especially with younger or untested management. That's one thing that stood out right away. Another thing that frustrated me with the hedge fund world is just how much people rely on numbers and models. There's so much of this. Let's model it out, see what the EBITDA margins are going to be next quarter and next year, and it deserves this multiple based on peers, and all this like stuff that makes your head spin. And the really great investors, in my opinion, and short sellers differentiate themselves by trying to understand the company. Are customers happy? Is this product adding value? Because in the long run, that's going to end up being reflected in the financial statement more than any like model can predict. So what struck me is, especially New York City hedge funds tend to be numbers and model focused, while really great short sellers and investors will try to talk to customers and ex-employees and get a flavor for the culture of the company, how innovative are their products compared to competitors, could they raise prices and keep their customers. A happy customer is going to refer people, and it'll make it easier to grow in the long run. All that stuff is really important, and there's no way to capture customer satisfaction by reading a 10K or an SEC filing. That's another thing I learned working for hedge funds. And the final thing I learned is really smart people often get it wrong. Sometimes you'll see like, Dan Loeb has a stake in this, or Bill Ackman has a stake in that. One, you got to understand, most of these big hedge fund managers, they're relying on younger analysts to do the work. So they might have a stake in it, but it's not even their view they're expressing. It's their 24-year-old analyst who's supposedly very smart. Yeah. And smart people get it wrong. So just be somebody
all the time. Yeah.
So that's the final thing. Like if Jim Chanos is short something, it might be a good short, but he could be wrong. If Bill Ackman's long something, it might be great, but it might be a Valiant and it might be wrong. So you always got to think for yourself and see if something makes sense to you.
What you're saying, Edwin, really resonates with me personally. And that's part of actually the reason why I named this channel Unrivaled Investing, is because my focus is each video when I'm looking at a company, I'll do a back of the envelope of a range of valuation. Usually it's really wide range. It could be like down 60% and up 100%. It's usually like a huge range like that. And the reality is most of my focus is that question of like, is there something special about it? And the special part comes back down to, are you doing something special with your customers? And that's the unrivaled part. Do you have an unrivaled value proposition when it comes to something that you effectively advertise for your customers, where they wouldn't want to go to someone else? And that's what makes it potentially a special business, potentially a special stock over time. So do you want to dive into Twitter now? You ready to share the thesis or talk about that?
Let's dive into Twitter.
Awesome. So why don't you give like a 1 to 2 minute breakdown on, or however long you want, and then we could dive into little pieces of it.
So Twitter, it's a $50 billion social media platform that historically has earned money by showing advertisements to users when they're scrolling on the app. But now they're transitioning from being an ad-based social media platform to monetizing through an array of new products that I think are going to be really successful. The way that I'm most excited about is called super follows. So I assume most of your users hopefully are familiar with Twitter. And users can follow other users to get tweets, advice, videos, images, just thoughts from a popular user. What Twitter has said is now anybody with the following of 10,000 or more over the age of 18 can start to monetize that relationship with their followers and can put a paywall essentially on some of their content. So I could say, hey, to my subscribers, I'm still going to tweet stuff for free, but I'm going to put maybe more specific company analysis only to my super follows, and you need to subscribe for $10 a month to get that content. It'll also allow people with popular followings to host live audio events and give other content to their super followers. I think this is going to be a major, major hit with online creators, simply because Twitter is the best way for online creators to stay close with their customers, and certain demographics already rely on Twitter for a ton of their traffic. So I know the email newsletter business really well. Almost every email newsletter needs Twitter to grow. Over half my new subscribers come from Twitter. You talk to any email newsletter author, 50 to 80% of their new signups are going to be coming from Twitter. You can't really use Facebook. You can't use LinkedIn. You can't use Snapchat. Twitter is the only place for that. It's also true, I think, for a lot of podcasts. And if I'm realizing enormous value from Twitter, it would just make sense. And all my audience is coming from Twitter. Twitter's the place I'd want to monetize my relationship with my audience. So I know myself and all the other financial newsletter authors I talk to are going to use this product as soon as it comes out, because it's another way I can stay close with my audience. It's the perfect way for me to interact with them. I'd want them to hear my face, see my voice, be able to ask questions, host small live audio events through Twitter to discuss reports I put out. It just makes a lot of sense. And to show how great of a business the super follows it's going to be and how well of a fit it's going to be on Twitter, it's already happening without the company's approval. One example I cited in my article is there's this trader, Moonshine Trades, who developed a 30,000 person following on Twitter, just sharing like free short-term trade ideas. And he has a locked account with like 500 followers where he says, hey, you can follow my locked account, but I'm going to bill you off platform $60 a month to give you access to this locked account, which is essentially what the super follows business is. And he's created, a $500,000 a year business just billing off platform, which has a ton of friction. That thing, of course, is going to migrate to Twitter super follows, because that's essentially what it is. And then Twitter is going to be taking a 20% cut of that revenue right off the bat. So in short, there's going to be tons of people like me, traders, podcasters, anybody with an online following who cares about interacting with their audience is going to launch this and be paying Twitter like 50 grand, 100 grand a year in fees right off the bat. So I'm really bullish on super follows. There's a few other angles we can discuss, like Spaces, Blue, their subscription service, e-commerce. They're launching Topics as a way to more easily convert new website visitors into daily active users. But I'm super bullish on this, and Wall Street doesn't seem to be giving them much credit because it's in its infancy. It's beta testing now. It's going to come out in a month or so. So it hasn't been reflected in the numbers, or it's been reflected in the costs, but not in the profits yet. So that's what makes me most excited when it comes to Twitter, is their potential for a lot of new monetization from their products, especially super follows.
Okay, so effectively, because the reality is I don't really follow Twitter that much at all. I've followed some of the other social platforms that are multiples the size, and so when I look at Twitter today, and historically, this is pretty much 100% ad revenue. Is that the right way to think about it?
Yeah, 90%. Yeah.
Okay, so you're looking for sort of creator economy tools that'll get launched in ideally the coming months and quarters. And how do you think about that mix relative to effectively their 90% of their business now? Because I would think Wall Street, yes, Wall Street's forward looking, but sometimes Wall Street likes getting sort of smacked in the face with like, hey, here's the monster business that's growing super fast versus it's sort of pie in the sky and someday they'll deliver on it.
So I think Twitter a year from now is going to be seen as a royalty on the growth of the creator economy, because they're just going to be taking a 20% of really any online creator's revenue monetized through the platform. It's tough to say exactly what the mix is going to be a year out from now from ads and the new sources of revenue. I'd imagine it would like become roughly 50-50 over the next 18 months. The one signal management has given is that they want revenue to double. I think it was by June 2023 or by 2023 to 7.5 billion.
Wow.
So the management sees a lot of potential to grow revenue. But the thing is, this is a completely untested thing. It's completely new waters. So I think even the management doesn't know how successful each one of these products is going to be. But what Twitter management has said, and what excites me, is they want to test a lot of new products, see what works well, see what works doesn't, cut the stuff that doesn't work well, and let the stuff that does work well run. And I like that approach to experimenting. It kind of reminds me of Amazon in some ways, saying we're going to take big bets. Some of them are going to fail, but the ones that work are really going to work. We saw this with tweets, which is their disappearing tweets function that they launched and then took away once engagement wasn't that good. But that really excites me when it comes to Twitter.
So I couple of questions from just what you've shared so far. Thinking one is on management, Jack Dorsey in particular, and then another is, you know, looking at these products and the competitive dynamics. And so let's go with the competitive dynamics first in terms of rolling this out, because part of the thesis that you're talking about effectively says, hey, there's all these businesses that have already been established through Twitter, using Twitter effectively as a top of funnel to convert to something that's then off platform, such as Patreon or OnlyFans or something like that, or Substack, like you're using. And so I personally use Patreon. And so what's I guess the pain point that, so I recognize there is friction to just send someone to like, hey, here's the website for the paid content. I guess the question is like, for me also as a fellow creator, there's that discomfort of trying to migrate users. And so I guess like I'm thinking, what makes it so easy to do that switch where all of a sudden a $500,000 business is now, you know, converting entirely onto Twitter? Like what makes that value proposition from them unrivaled that does grow over time?
I love that question, Daniel. First, you won't need to send people off platform if you're doing it through Twitter. With online businesses, every bit of friction matters. So being able to do it on the distribution platform instead of saying, oh, let me send you to another website, that is going to be great for converting free to paid, the top of funnel to paid users for the Twitter audience. The second is going to be saved credit card info. So the toughest point for any online creator is getting people to enter their credit card info and say, okay, I'm going to pay. So many people get to that page. They're like, oh, I lost my wallet. Oh, let me think. I'll do it tomorrow, all this. But being able to have saved credit card info on users is going to be huge for Twitter. And what I mean by that is Twitter right now has 200 million daily active users. Once you sign up for a live audio ticketed spaces or their blue subscription or an e-commerce thing or somebody's super follow business, they're going to save your credit card info, and that makes it possible to buy in one click everything else. And that is going to be really key for online businesses, because Twitter's going to get the credit card info from you for one thing, and then I can super follow you, Daniel, on Twitter with just one click and become a paying subscriber without even leaving the site. Getting rid of that friction is key. And then all online creators really like being close to their user base, having a close relationship with their customers, with their supporters. Twitter's the best way to do that. I didn't go into too much depth on why. Here's an example. Twitter has a great tool called Spaces. It's similar to Clubhouse. And it lets anyone just post a live audio event at any time with either their entire public following, or you can segment it to only be paid subscribers. This is huge, and it's so much better than the alternatives like Clubhouse for a few reasons. Because it's linked to your Twitter profile, I can Let me give 2 examples on why it's better than the competitor Clubhouse. I've hosted a live Twitter Space interview with the hedge fund manager on Clubhouse and on Twitter at roughly the same time. The one on Twitter had like 10 times the amount of listeners, 600 versus 60. Because it's on the popular channel, everybody's already on Twitter, they'll get a notification at the top of the app saying, oh, this Spaces event is going on, you might want to join. So instead of having to blast it to your audience, hey, this is something I'm hosting, it can be an in the moment thing, or they'll just see you're doing an event and join, so you get more volume that way. And then within the app, the reason having a live audio discussion on Twitter is so much better than another platform is if you're hosting a Q&A, I can easily see, oh, this questioner has this Twitter account, it has a lot of followers, he seems legit, I'm going to bring him up to speak and I don't need to worry about him being a troll. Or I can see, oh, this person's trying to get mic access, but his past tweets indicate he's a little odd. I don't want to give him mic access. It's going to ruin and this is such a thing with like live audio events that people don't think of. So hosting a live audio event on Twitter is infinitely better than Clubhouse and will be infinitely better than a Facebook or LinkedIn, because right away you can just sense whether or not that person is going to be good or not, and it lets you interact with your community in a much better way. So that's one advantage. Another advantage of using Twitter as your paid monetization over a Patreon. Patreon is just like, it's okay, but now it's going to be outdone by Twitter, because if you're interacting with your audience through Twitter, why send them to a different website to set up their credit card info when you can just say, sign up with one click and you get it right now?
No, yeah. I'm definitely seeing the angle where if you're already using Twitter as your main top of funnel, that does remove that point of friction. So for any businesses using Twitter as their main top of funnel, to in fact, when I say top of funnel, I mean to acquire new potential customers, then it's sort of a natural fit over time. And there is that potential for that big migration over time. The conversion of like this becoming a multi-billion-dollar business, it sounds like for me personally, this could take like several years before you like, maybe you start seeing it over quarters that you start getting traction, but before because right now ad revenue is like $4 or $5 billion. Is that the right way to think about it?
I think it's a little lower than that, but yeah.
Okay, so looking at that, in order to get to like where this is a meaningful material part of the thesis, you're probably talking about a few years out. That said, like what you are saying in terms of getting that credit card data, because you've made it easy, it's right then and there. Oh, there is exclusive content. I could definitely see how that does create additional channels for future monetization, future optionality for Twitter, such as I think e-commerce, where it's like, hey, now if we want to have brands directly selling on here, we can do that. Is that part of the thesis as well?
First, I want to push back against what you said, Daniel, that this is going to take years to play out. I think right away, it's going to be a cash cow from the absolute start. Because like I said, there's a lot of people, myself included, running six-figure businesses with all the traffic coming through Twitter. The account I mentioned before, Moonshine Trades, he's literally making 500 grand a year from a paid Twitter account. That right away, day one, is going to become a super follow account. He'll have higher conversion because it's less sketchy of billing off platform. Yeah. Logistically, it's going to be so much easier for him. It's just going to be formalized and make a lot of sense. That's a free 100 grand of revenue for Twitter right there. There's thousands of people like that. What might take more time is then you see all these creators making a lot of money through Twitter super follows. People like you who don't have, Twitter as their main distribution channel might now start to think, hey, maybe I do use Twitter more. Maybe I'll send my audience to Twitter and encourage them to super follow me on Twitter, and I'll start experimenting. Getting people off platform to come to Twitter to launch things through Twitter might take time, but I'm pretty convinced that right away, within 3 months, this super follows is going to be an absolute hit.
Got it.
So that's thing one. What was the second thing you mentioned? I'm forgetful.
Well, I was talking about taking that data and effectively creating optionality with e-commerce.
So e-commerce is another thing that they're just in the early stages of testing, saying, hey, if you're a business and people look at your business Twitter profile all the time, you can have like a few products at the top of your profile for people to buy. It's not clear whether that's going to be done completely on platform or they'll send you off platform. it's like really early to say whether or not this is going to work well. I think it will, because Twitter's really good with spur of the moment type things, and they get a lot of data on users. So they can say, hey, this is an event going on, right? There's a baseball game right now. We'll have like these baseball shirts being advertised on Twitter. I think like that is going to work. But I don't know, it's really early to say, but having credit card info stored from one thing definitely is going to help conversion for the other. It might be the other way around though, where people start putting in their credit card info to do an e-commerce purchase through Twitter, and then they use that sort of stored info to become a super follower of someone else. And it's important, it's not just e-commerce and super follows. There's going to be ticketed spaces, meaning you can have a live audio event with a lot of people publicly and charge $2 for admission. And you'd enter your credit card info there, it would be saved. And now you can shop or super follow with one click. There's Twitter Blue, which is going to be their subscription service, roughly $3 a month, that right now they're testing in Australia and Canada, saying, hey, if you're a super user of Twitter and you really love it, pay $3 a month for a few extra features. I know I'm going to be a super follower right away. And that's how they're going to get the credit card info for a lot of super users right off the bat. And then you can super follow accounts with one click. You can do e-commerce with one click. The biggest thing is I just know so many people like myself who are running online businesses, newsletters, podcasts, video services, whatever, that are gonna like right away be paying Twitter like 6 figures, 50 grand, 100 grand a year to use the super follows. And it just makes sense. And then I talk to people on Wall Street about it, and you know, everybody's just asleep. Well, oh, Facebook is growing a little faster, or like, you know, Facebook, it just, you don't understand. Twitter's been under monetized for so long, and the management is just starting to turn the corner. And I think the management is going to execute really well.
Got it. And on that point, bringing up management, because I think that's been a point of either contention or pushback from investors. And I've seen the jokes made on Twitter where folks are saying, man, what's Twitter spending all this R&D on, like products that like what exactly are they innovating on? So it sounds like they're finally like they've been spending, and now you might start seeing the fruits of it. It makes me, you know, so I have some, you know, so that's a, you know, feel free to comment on that. But my real question here is, you know, not many people can be Elon Musk where you're running a bunch of different companies. And I'm sure the short seller and you would love to talk about that.
Yeah.
But you know, not going on a Musk tangent, but wearing multiple hats. Obviously, you know, being a CEO in one company is very, very hard from a life balance perspective, let alone two. So how do you think about Jack Dorsey in terms of balancing that in terms of their future direction? Because I think that's been the pushback that at least I've seen from folks effectively saying like, wait a second, maybe this isn't developing the way it should because he's focused on, you know, his other initiatives.
Daniel, I'm so happy you brought that up. So just for users who might not be familiar, Jack Dorsey was a co-founder of Twitter. He was with the company. He got pushed out. When he got pushed out, he started this company called Square, which at the time was just a startup. Now it's publicly traded, $1 billion payments company. And then in 2015, while he was still CEO of Square, he rejoined Twitter as CEO and is now co-CEO of both companies. It's been similar to Steve Jobs in some sort of ways, where he first with Apple got pushed out, started Pixar, then came back to Apple. But what's different with Jack Dorsey, he's still running both companies. Let's look at what Jack Dorsey did when he inherited Twitter in 2015. When he inherited Twitter, user growth was going down like 1% a year, or it was flat. Number of posts was declining, and the platform was in disarray. The first thing he did is he changed the team up. He got a new CFO. He has a new head of product in Kayvon Kapoor, who joined, I think, in 2018, who I think is just outstanding, A+. He changed the culture, and if you talk to engineers at Twitter, they're all excited. They love Jack because Jack's a true engineer. Then he focused on improving the health of conversation on the platform. So some people think Twitter is toxic today, but 6 years ago, it was extremely toxic. So he invested in a lot to automatically flag tweets and bot accounts. He invested a lot in making it easier for users to report other accounts in Twitter just to automatically ban those. I think they ban something like 1 billion tweets and accounts every year. So it might seem simple, but logistically it can be really complicated. And you listen to him and he talks about all the unique problems problems around improving the health of the conversation. For example, if one user says to another user, hey, I'm going to kill you tonight, that could be seen as a threat. But if they usually talk about video games, then they're just talking about the video. So you need to like judge based on context and all these unique issues. So they invested a lot on improving that. Unlike Facebook, they cut all political ad spending, which is something that is a financial hit in the short term, but in the long run is probably going to be a good decision, improving health of the platform. They rewrote their terms of service to make it simpler and easier to understand. They did all these things that are just costs. They're not reflected in any revenue thing, but they do show up in engagement, which is now how new user growth is growing like 20% annually, when it was flat when he first took over. So he did all those things in the first 6 years: hire new people, improve the culture, improve the health of the platform. That doesn't get reflected in the financials, but you do see it in engagement. And now 6 years in with the new team, he's turning on the monetization switch. And that's what kind of excites me is Wall Street looks at it and they say, oh, well, the revenue hasn't been growing before. And this time is different. Well, no, you don't understand. He was focused on the team, then the culture, and then improving the health. And now it's monetized. This is their first run at trying to monetize it. So that's what makes me really excited. Now, the thing everybody says about Jack Dorsey is he's CEO of two companies, Twitter and Square. And what people love to say, and I just find it so funny, is he has most of his net worth in Square, because Square is huge. And if he has 75% of his net worth in Square, why is he even focused on Twitter? Twitter's the orphan. Why would he even wait? He's just neglecting it. And that just couldn't be more backwards. Since Square IPO'd in 2015, the stock's up 20x. So the reason more of his net worth is in Square isn't because he invested more in it. It's because the stock is up 20x. So you're saying because his other company has performed super well, you don't want to invest in the current company? If Square performed worse, more of his net worth would be in Twitter and you'd want to invest. It just makes, he's super successful running Square. Twitter's just doubled over the last 5 years. And now you don't want to invest in Twitter because more of his net. It makes no sense. If you look, when he donated $1 billion of stock during the pandemic, Jack Dorsey gave it solely in Square stock and no Twitter stock, which is probably a sign that he views Square as the more fully valued one and Twitter as the potentially undervalued one. He's been public about his schedule. Jack Dorsey spends 9 a.m. to 2 p.m. in Twitter's offices and then 2 p.m. to 6 p.m. in Square's offices. So 9 a.m. to 2 p.m., that's 5 hours at Twitter, then 4 hours at Square, which is literally across the street. So he's spending more time at Twitter. He hasn't given away any Twitter stock, and he's super successful with his other company. And then people just want to be silly and are like, oh, well, you don't want to invest in a CEO whose other company went up 20x in 5 years. What? Are you crazy? And then I love Jack Dorsey as a person. If you look at what other people think of him, Elon Musk says he loves Jack Dorsey. Kanye West called Jack Dorsey his favorite founder. He's someone that's really not motivated by money. He always says, like, if users spent less time on Twitter, I'd be okay with that as long as they're learning more or enjoying it more, which is the completely opposite approach of Mark Zuckerberg. And like Mark Zuckerberg's approach might be better in the short run, but in the long run, when it comes to regulation, when it comes to trust of users, I think Twitter's strategy is going to pay off. One final thing I'll mention in this little rant, Daniel, is
I'm loving it. So keep it going.
Excites me about Twitter is you look at Snapchat and an Instagram and a TikTok, the 23-year-olds using it today are probably not going to be using it when they're 33-year-olds or aren't going to be using it in the same way with the same level of engagement. That's not true with Twitter. I'm 23 today. I use Twitter. I see myself using it when I'm 33 and 43 and 53 because it's about ideas. It's about learning. It's about intellectual things. And that like grows with age. That's not a fad like other social media apps. So bottom line is I really like Twitter management and I think they get criticized for the wrong reasons. And if you look at the new team here, I think they're A+. And now with the healthy engaged platform, they're turning on the monetization spigot, which should be huge.
Got it. That was a very thoughtful answer. So thank you. Thanks for sharing that. There's two big questions that I have left in my mind right now when I'm considering Twitter. One is around their core business now, revenue. You brought up Facebook, and full disclosure, I personally own Facebook stock. And, I personally just like looking at it, the operating on all cylinders and multiples the size of Twitter. And I think looking at this business, you know, I mentioned that I'd bring up this quote before our call, where I said, you know, isn't sort of Twitter at a sort of disadvantage because of their scale and size and the data that they have on their customers? And Mark Zuckerberg once used the quote was he described Jack Dorsey and Twitter as sort of like a clown car that accidentally like discovered a gold mine, and so or ran into a gold mine. So how do you think about their relative competitive position for their core business now? So I definitely hear you on terms of optionality, and you know, the time frame at the end of the day, whether or not it's a few months or a few years, optionality can still be significant. And so what you're saying makes sense to me. The core question now is, well, 90% of their business, that's a big part of it. How that phases over time, that's a question for me. And so I'd love to hear your take on like, how is that from a competitive standpoint? Because I've heard arguments effectively saying that they are at a competitive disadvantage at this point.
So two things. They used to be a clown car. Mark Zuckerberg got it right. But when Jack Dorsey came in and you gave him a few years, now they're not a clown car. And you just see it in the results of engagement and them launching new products that are popular like Spaces. Now, when it comes to ads and why somebody would choose Twitter over Facebook, that is so right. Twitter, if you just talk to people in the ad world, historically has been so bad with ad monetization. They're so bad at targeting. It's just like, you know, advertising on Twitter is advertising into the void. You can't like get the personalization that Facebook was getting. You know, one way to interpret that is also Twitter has the most room for improvement. So now Twitter is focused a lot on performance advertising. So rather than just like showing an image or a video, you can do something where you're getting a user to do an action like download this app, and then Twitter will be paid on app downloads. And from what I've gathered, just talking to a few other hedge funds, is Twitter has now really turned the corner with like targeted performance advertising. And if you look in their last quarter, they said, I think revenue grew something like 70% from advertising, which is huge and partly pandemic related. They've said performance advertising is going to become half of their revenue, where half is now going to just be the traditional. Right now, 90% is like traditional advertising and 10% is performance. In the future, half is going to be performance, according to management. I'll be honest.
When you say traditional, you're talking about effectively views, like per thousand or per million views.
Exactly. Well, performance is getting them to do an action, like download an app. You know, this is not the area where I'm like strongest. This is not the area where I'm most excited, but they just have a ton of room for improvement. Frankly, like, you know, I think eventually they're going to just roll out a way for users to pay $10 a month and not see ads. And I think that is going to be popular with super users. The thing that excites me is all these different ways of monetization. Their ads, they have a lot of room for improvement. They've shown it's growing. Another way to think of it is when the economy does well, advertising does doubly well. But when the economy does poorly, everybody cuts ad spend. I think a lot of people are excited for a roaring economy right now. So brands are going to be advertising a lot on Twitter. You know, but the idea that Twitter can't do things, Facebook can do, well, they're not like competing social media apps at all. Twitter launched Spaces, which is wildly successful. It's destroyed Clubhouse, and Facebook didn't get it. So there's one example of something they were able to do that Facebook couldn't do.
That's a very fair point about innovating. Like Twitter definitely responded to Clubhouse way faster than any sort of initiative from Facebook.
And look at Facebook. Facebook just launched a newsletter thing called Bulletin. Twitter acquired Review, another newsletter platform. Facebook has just failed with that. No one's using it. I think their feature author, Malcolm Gladwell, has like posted one post through Facebook, and there's like all these unique little things that are wrong with Facebook's newsletter feature. And I'm telling you, the newsletter feature isn't going to work on Facebook because literally every newsletter author gets no traffic from Facebook and all of it from Twitter. It's a joke in the newsletter community that you get usually as much traffic from Facebook as you get from DuckDuckGo, which is an obscure search engine website. Because it doesn't work for certain intellectual things. Another reason Facebook isn't going to do well with online creators, and Instagram too, is typically with Facebook, you're only seeing stuff from accounts you follow, from friends you friended and stuff like that. With Instagram, you're only seeing stuff from the accounts you followed. much less like showing you new proactive content that they think you'll like.
Hmm.
But Twitter is 100% about that. You'll see accounts that if you follow me, you'll see stuff I retweet. So you get to see other accounts. You'll see stuff in their algorithm, especially with topics, which we should talk about. And what that does for Twitter is it's possible on Twitter to grow an audience without having one. So it's possible to grow from 5 Twitter followers to 10,000. On Instagram, it's still kind of possible, but it's much more difficult. So that's why almost all online creators prefer Twitter. If you can get a sense of the game, is it's much easier to grow there because the Twitter algorithm is helping you. When people retweet it, it goes to a lot of different accounts. While with Instagram, you're just like needing to bug people to follow you so then they start getting updates.
Got it. So the scale potential for creators, that is more appealing with Twitter platform versus the different Facebook products.
Yeah, and also Facebook just doesn't have the trust of creators. I think the Facebook, like, modus operandi is give everything for free for the first 2 years, get them hooked on, and then once you can't leave the platform, they'll start screwing you over. Like Facebook just, where you base your monetization as an online creator, if you're really going to pump that channel, you want to have trust in it. And Facebook just won't have that trust with online creators. And that's another intangible you can't sense in the financials. It's just something by talking to people in the community.
Yeah. Let me, with every company that I look at, I always start with trying to understand their value proposition. What's their growth trajectory in the years ahead? What are sort of the optionality that it has? Trying to understand management's take. I think we've covered a large bit of it there. I always try at the end, as I'm considering, should this be part of my own personal investment journey? I always want to size up the valuation and how do I think about the risk reward potential, as I look at things. I think in this market, a lot of people are now like, valuation doesn't matter, huzzah. And I'm like, dude, like that's exactly what you'd expect to hear when times are bubbly. And so I'm curious to hear your take on, how do you consider the valuation? Because you can have great fundamentals, but how does it compare? Because you don't want to have that offsetting valuation compression over time that could just effectively wipe that out from a return perspective.
So right now, Twitter's trading at roughly 10 times revenue, while Pinterest and Snapchat, the other two kind of comparable growing social media platforms, are trading at roughly 20 times revenue. Facebook, which is super established and has less room for growth, is trading at 10 times revenue, roughly. So Twitter, the one with the most room for growth, like literally going to maybe double revenue over the next 18 months, is the one trading at the lowest valuation. And it's just like, that makes no sense. That makes no sense. That makes no sense. And let's do some math just for fun. Again, these numbers, you shouldn't rely on them. This is just me
back of the envelope
a little. Twitter Blue is their subscription service. It's going to be $3 a month. That's roughly $30 a year. Twitter has 200 million daily active users. Let's say 10% sign up. That's 20 million new users at $30 a month. That's like 600 million new dollars in just revenue for Twitter. That's going to be 100% profit after taxes. It's super high margin, just charging people $3 a month for extra tools. That revenue stream alone from Twitter Blue, if this service is super successful, that deserves to trade at some absurd 100x multiple, because it's going to be growing really fast and it'll have a ton of room to raise prices. So just the stream from Twitter Blue being 600 million in revenue could be worth $60 billion. That's how I think of it in my way. And then Super Follows has this ginormous potential. Like if Twitter's earning $1 billion in year one from creators by taking their 20% cut, that is something where more and more and more people are saying, I'm going to start off on my own as a young 20-something-year-old and just create content online. That's growing. The amount of people paying for that type of content is growing. Every newsletter is growing like 10, 20% a month. So getting that revenue stream from online creators is going to deserve a crazy 100x multiple too, in my opinion. It's tough to say what the numbers will be now because it's so early, but also because it's so tough to say. Wall Street doesn't recognize it and it isn't super priced in my opinion. So Twitter's a $50 billion company now. I always like to think, you know, they could 10x over the next 4 years and be a $500 billion company. But that's just me throwing out silly numbers. The other thing, Daniel, you know, not on valuation, and I'm sorry to ramble a bit. The other thing with Twitter that's really exciting is topics. So historically, Twitter is difficult for new users to get value, because in order to get value from the platform, you need to follow like 50 accounts that are interesting. But it's tough to find great accounts. And oftentimes the ones with the largest followings are like the least interested. So you have this weird problem with new users needing to invest an hour to follow good accounts. And then the ones they follow usually aren't good. So they just disengage and they back off. Twitter has solved that with a new thing called topics, where instead of saying, hey, follow all these accounts and spend time researching them, just tell us 5 or 6 topics you're interested in. You can follow the topic. And then by following this topic, let's say investing, or let's say gardening, or let's say basketball, Twitter will automatically find tweets in that topic and show them to you. So right now, as a new user, you just say 5 topics you're interested in, and you find the super engaging, the best tweets on this topic. And the engagement from people that follow topics is a lot higher. It leads to a lot of new user conversion. And what Twitter tells investors is, we have 2 million people every day coming to our site from news sources, from people who hear about Twitter, from people who see a tweet on CNN. People go to Twitter every day. 2 million people every day who don't currently have an account on the platform. And by removing this friction and making it easier to sign up, and by making new users getting more value up front, I think Twitter's going to see a lot of user growth in the US and abroad. That's another thing that, you know, just, it doesn't really show up in the financials at first blush, but in the long run, it's really great. And the final thing is, I think Twitter has the biggest moat in the world. Nothing is going to replace Twitter, because you just have the 200 million people who are already involved. I wouldn't want to go to a competing app like a Parler, because you just lose your whole audience, and that's something you don't want to do.
Yeah. So I you know, as I listen to what you just shared, I think at the end of the day, I'm not like the valuation part is a little bit tougher for me to get my head around. But I think if I'm correct in terms of summarizing your take, which is that there's a lot of different options here, potential lottery tickets that could be worth a lot, can grow a lot faster. And once you start seeing some of those hit, then you potentially have a re-rating, because then people say, holy smokes, they've successfully put their foot in the door here for a much, much bigger market than just ad revenue. And ad revenue itself is big. And so not only do you have this foot in the door for these different things, such as the super users that are paying, let's say $3 a month, that you think could pencil out to somewhere between 500 million and $1 billion bucks a year, which would be super high margin. You also have this sort of optionality for their growth, because as I think you said, there's 200 million daily active users versus I think like a Facebook figure, which is like half the planet uses Facebook, I think, on a daily use basis. So you're effectively saying, if the investments they've done in the past were, you know, the things that Jack Dorsey's talked about making it more of a productive conversation, and those things don't necessarily show up in the revenue, that those were the seeds that might result in continued growth in their platform. So that way, this might have, let's say, 1 billion users at some point, because it's easier to engage, it's easier to follow a topic. And that in itself could, you know, if you're able to grow 200 million to 500 million or 1 billion users, then layer on all these different additional things. That's really where you start talking about, you know, 5-10x upside. Is that, am I capturing that right?
I would say that's close to perfect, Daniel. The one thing I'd modify just a little is, I don't view these as like 5 different lottery tickets for monetization. E-commerce might be a lottery ticket, because I really have no idea. Blue is probably a lottery ticket. I know I'll sign up. I don't know if most users will. What's not a lottery ticket to me is super follows. I would say I'm pretty confident that's going to work. And the reason it's going to work is because it's already happening before Twitter rolled out this feature. There's already people earning 500 grand through the platform just by using like a mini super follows business they've created without Twitter's like permission. That's how much sense it makes. So I just know, like, if you ask me how much I would pay, if I lost access to my Twitter to regain access, it would be like an unfathomable sum because it's so important for my business. If you ask most newsletter authors, I bet they'd say I'd pay 50 grand, 100 grand to regain access to my Twitter. It's that important to me. You won't find that for most online creators with Facebook and Instagram and other sort of things. You might find it with a celebrity who has a huge following.
Sure.
But Twitter, and one final quote to think about that I love for online businesses, Danielle, is large audiences are cool, but niches are profitable. So much of normal social media is about having large audiences and monetizing it through advertising. But the reason niches are different is because if you're in a niche, you can monetize it through paid subscriptions because people are super passionate and they're going to be spending a lot more to like become an expert in that niche or for content in that niche. And Twitter's all about niches. I carved out my little niche in Twitter of the activist short selling space and like some technology companies. Everybody's got their little like niche in Twitter. And that's another reason it's so much better. And like you can't even compare Twitter's financials to like a Snapchat's financials or a TikTok's financials, because that's all about just large audiences and silliness. Twitter's about like cultivated niches that can ultimately be monetized through paid subscriptions, which is so much more valuable.
Riches and niches, love it. So let's wrap this up. Is there anything else, Edwin, that you want to share or thoughts on Twitter or anything in general?
You know, Daniel, I like what you said in your intro about trying to find compounders. I got this little habit of investing $1,000 and any time I see a company doing something cool or a CEO who I really like. So I've like invested just on a fly on Peloton and Duolingo and, you know, Brunello Cucinelli or all these like weird companies. So maybe one day we'll talk about that. And you know, most of your users should know I write the Bear Cave newsletter. Most of the time I'm trying to expose corporate misconduct. And if you're interested in that sort of thing, check out the Bear Cave newsletter.
Awesome. Edwin, this was a great call. I look forward to doing another one in the future with you, maybe a take on the short selling argument or some of these sort of tracker positions or teaser positions you've started.
Yeah, and hopefully your users don't get too upset if Twitter does poorly. No,
I'd absolutely. And if this is, if this is your first time tuning in, once again, my name is Daniel. You're watching Unrivaled Investing. I'd absolutely love to hear your comments below. Whether or not you love it or hate Twitter. This is all new for me too in terms of thinking about Twitter. Edwin, you did a beautiful job. I loved hearing it. So thank you so much, Edwin.
Thanks, Daniel, for having me on.
This is great.